Well, PayPal was finally starting to build up momentum once again, but we have seen this show before and it was all just a tease and a mirage before falling back down once again and taking away all the progress that we made. But more importantly, you didn't buy this stock just to see it stall at $60 or $70. You want it to be well over $100 as soon as possible. So let's go over the 6 things that need to happen in order for us to see PayPal over $100. And I'll even tell you when I think we see that happen. Just make sure you like the video if you like getting the truth out the hype, because that's exactly what you're going to get today, guys. Let's talk about PayPal. You know, in my group, we call it PayPal here. I think that's pretty much caught on everywhere now because it's just a pain to say the least. But let's jump into it with number 1, and that is fintech has finally gotten out of the doghouse. Wall Street has finally started to come around to fintech. Now, of course, it started, the come around, the kind of the turnaround per se in fintech started with the high flyers. And let's be honest, it really should have. Not all stocks are at the same part in their journeys, the same type stocks or anything else. Think about this. Robinhood isn't a turnaround play like PayPal is. They are accelerating, they are growing, they are at the beginning of their journey. And the same exact thing with SoFi. Incredible performance quarter in and quarter out for over 3 years now, just clicking on all cylinders and just, I won't call it exponential growth, but a great growth rate, a great journey so far. But PayPal was a turnaround play and they are in the middle of the turnaround. That is completely different than SoFi and Robinhood, for example. So trying to kind of compare those and kind of draw correlations and everything else beyond the fact that they're all in fintech is really hard to do, and not really being fair to any of the stocks there because they're in just completely different places, completely different parts of their journey. But remember, up until just a few months ago, even SoFi and Robinhood were in the doghouse too for the past 3 years, despite great execution, great products coming to market, and basically underneath on the core of the business, right? The fundamentals improving year in and year out during that time. They were all in the doghouse too. So until they got out of the doghouse, PayPal was honestly going nowhere. We needed fintech as a whole to get out of that doghouse, to get the ball rolling, and that finally happened. But guys, it takes more than that to get a sustained run to $100. So let's talk about number 2, and that is analyst. Now, I know we talk about it all the time here. Take analysts with a grain of salt. They're useless. Their price targets are useless. Everything they're chasing, that's exactly what they're doing. But they're good for one little thing, little thing, and that is they tell you where the momentum is on Wall Street right now. And when you look at the numbers that they're giving, we are, basically past the most bearish analyst price targets, with the average of all of them being around $83, which is up from $72 just a few months ago. And with the high being $105 per share on the high end there, which again is up from just a few months ago at $88 per share. So as you can see, analysts are moving their price targets up and obviously getting less and less bearish and more bullish on the stock. And that right there just tells me where the momentum is going. It doesn't tell me anything else of that nature. We'll talk about things that actually matter in regards to the fundamentals of the company itself here in just a second. But it is an important piece to understand that even though their price targets are useless, everything else is useless, it does show me that, hey, the momentum on Wall Street at least is starting to move in the correct direction. But fundamentals are what matter. So let's talk about the biggest one to me for PayPal stock, and that is number 3, which is net income acceleration. Alex's whole premise that he laid out in his grand vision for PayPal was increasing profitability. Not necessarily growing revenue to these exponential numbers, but growing the profitability piece and accelerating that over time, which he has done that for more than a year now. But we need to not only see it increase, but the pace to start to accelerate. It hasn't accelerated to a point where Wall Street believes it and is going to get behind it and say, hey, this is he's got everything moving the right direction. We trust in this comeback. We need that net income number to accelerate faster to get the momentum moving faster in order for Wall Street to start moving the stock price up to the fundamentals. Remember, we talk about that. Stock price always gets back there, even though it's taking a long time. I understand. We've got to have that net income number continue to accelerate. Number 4, they have to prove they are innovative. You can't tell us what you're going to do, guys. You have to prove it. I know we get all wrapped up in the future and all this other stuff like that. Well, guess what? Especially when you're in a turnaround situation like PayPal's in, you have to actually prove it. They are still trying to just catch up for now. So step 1 is to catch up. And then step two is to innovate. If that happens, Wall Street will perk up. And especially if AI is involved, right? Which Alex says it will be, but they have to prove it and show it. And the early indications are that the new products are doing just that. However, we aren't seeing that hit the bottom line yet to any significant matter, as evidenced by the net income number we just discussed, not quite showing that acceleration yet. So the new products are starting to come out. Some of them are very innovative. Everybody, for the most part, has been impressed with them. But until they start giving us those wow numbers on that bottom line per se, that wow factor, it really isn't going to get Wall Street's attention, which of course means the big money is going to continue to stay on the sidelines and kind of wait on the turnaround a little bit longer. But that's okay because the company's doing number 5 in the meantime. And number 5 is share buybacks. Now, this to me is one of the strongest bullish points for PayPal, and they are buying back billions of dollars in shares this year, and that is being proven in the earnings. And at these depressed prices right now, PayPal being beat down, we all want to complain about it, we all hate it, but at these depressed prices, the return to us as shareholders is big. And the more they buy back before the stock comes back, the bigger the actual benefit to us as shareholders is. The float is coming down rapidly and will do so faster if the prices stay low and if they continue to execute on buybacks as aggressively as they have. So although I know we all hate the stock price being low and basically not going anywhere, this is one that will give us massive benefits in the future and aid in that future net income growth. And of course, aid us in the next point that we're going to talk about. And that is number 6, which is valuation. Now, you guys know valuation is the most important thing to me in the stock market. This is how you avoid buying hype trash to the moon, basically Tesla at $400 per share, and you're instead buying Tesla at around $100 per share. That's how you avoid that, is using valuation. Same thing Palantir. That's how you, avoid it at $180 per share, and you're buying it all day long at $6, $7, $8, $9, $10 per share. Valuation is what tells you what to do. And right now, the forward PE of PayPal is at 11. So it is even cheaper than it was the last time we saw these exact same prices, because the net income is higher, therefore making the valuation lower, meaning the business is more profitable than it was back then. That's why the valuation is even cheaper, despite the fact the stock price is still the same. Now, it's not Meta stupid, right? We're not quite to that level yet, but we're getting awful close, because Meta was back under 10. If you can believe that. That's how stupid Wall Street gets sometimes. You could buy Meta at a forward PE of like 8, 7 or 8 or something ridiculous like that. I know it was under 10 because I was just like, this just makes absolutely no sense. But we are getting to that level very quickly, and it won't take too many good quarters, really 1 or 2 good quarters here, for us to see that Meta type multiple. Now, I don't believe we have the same sort of upside that Meta had on that, just simply due to the type business that it is. It's a turnaround play versus just a business to where, Zuckerberg's turnaround was just basically get your head out of the metaverse for 5 seconds, quit lighting billions of dollars on fire in it, and get rid of all the employees you have hanging around making $250K without a job, right? Pretty easy turnaround relative to what PayPal has to do, which is basically fundamentally change the business. Very, very different, but it still doesn't mean it's not a great value. And let me kind of give you guys some reference examples for why I think it's a great value. Right now, Coke is trading at a PE of 24. And Walmart is at a 38, for example. And I don't think anyone would say they have more growth than PayPal in the future. I'm sorry, they're just not those types of stocks at all. But yet they are trading much richer than PayPal is right now, by a multiple of 2 or 3 or more. So that to me is just crazy. And just to kind of give you guys more reference points here, SoFi is at a forward PE of around 40 and Robinhood is around 50. Now I understand they have more growth, so they deserve a higher PE, but PayPal is trading crazy cheap by any standard. You can't deny that. There's nobody that can say that's not true at all, no matter what sort of growth rate you want to tag to them. The reality is that an 11 PE is just stupid for PayPal stock at this particular point in time. I know it's frustrating. I know it's maddening. But stocks always return to the fundamentals, and they always give us back to that fair value for any stock out there in the stock market. Remember, and I know it's been years, guys. I understand that completely, but it's not like, you didn't have a, 4-year journey with Palantir before we finally got the rocket ship up. SoFi's journey was even longer because it didn't really pop off until just a few months ago in regards to the stock price there. And remember, those are both high growth names relative to a PayPal, which is a turnaround play. So these things taking years sometimes that's the reality of it. Think about it. Apple, during one of the greatest bull markets of all time, and it was the biggest winner during that bull market, it actually had periods of time where it went years without going up as well during the greatest bull market of all time. So it is absolutely possible and feasible and not unusual for stocks to take a long time to turn around and come back to that fair value, but they do always return to there. So when does PayPal hit $100 per share? Well, a lot can happen, guys. And you guys know, if you follow the channel for any length of time, I am conservative in nature. So if it happens faster, I still win. So for me, it pays to keep my expectations conservative because I win no matter what. Happens to go faster than I think, great. No big deal. Happens to take, the more conservative timeline that I think it's going to take. Okay, I'm all right with that because I already planned on that and I've already kind of set my expectations there. So in a lot of ways, I'm making it to where I win most of the time. But for me, I personally don't think we see a sustained run over $100 until next year. Doesn't mean we can't hit it before then, but I'm not sure we're going to be able to sustain it. Now, I am perfectly happy to be wrong, and I hope that I am wrong because we've been buying the stock for a long time. I have more shares than I ever thought I'd ever have of PayPal. And at some point in time, you do want that to eventually move. So this isn't one to where we haven't had years to buy it at great prices. We have had years to buy it at great prices. So yes, it's frustrating, but the business is moving forward in the right direction and performing underneath. And that is what matters the most. And that is what you want to see as a performance out of the business. And always remember, share count is what matters, and you want to buy cheaper shares, right? You want to buy those shares. You want more Palantir at $7, not more Palantir at $150, right? That's what you want out of a stock. So getting it cheap is one of those things to where it won't take much of a run to make some good money on PayPal stock. And if you want to see my complete bull and bear case for PayPal and SoFi and a bunch of other stocks, and you want to see my complete watch list with price targets, you want to take 5 courses for free, get your free coaching. I may have left something special for those of you guys that hung around this long in the video. Check it out as a pinned comment down there, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.